Today I want to go over 3 of the best stocks to buy for June of 2018. Welcome guys to another video. My name is Nick. If you like this series, I do this series every single month along with a bunch of other finance, stock market, and investing related videos. So if you like that kind of content, make sure to hit the subscribe button down below. But either way, let's get into my top 3 picks for June 2018. If you haven't checked out my previous video on where I cover how my portfolio has done with my picks from every single month, make sure to check that out. I'll leave a link up here. And let me know what you think of my picks over the last few months, and including the picks in this video. Anyways, getting to my first pick for this month, we're going to look at eBay. So ticker symbol EBAY, just like the company name. eBay is a massive e-commerce company, but what they do differently is they allow the buyers and sellers to interact directly. So if I wanted to sell something online, it could be something as simple as an old smartphone, or even something like my car. I could go on eBay, put up a listing, and then anyone from anywhere around the world can go in there and either bid for the item or pay a set price that I've defined for the item. It's a great platform even if you want to buy brand new items, because a lot of companies sell items on there as well as brand new, sometimes even as open box or refurbished. So you can pick up some awesome deals on eBay, and I've personally been using it a lot recently, especially when it comes to electronics. But anyways, getting more into the details of why I think eBay is a good pick. First, if we look at the analyst action for the last month on eBay, there was actually 0 analyst action on the stock, which I find kind of surprising and kind of leads me to believe that there's going to be a whole slew of upgrades coming up soon. That's just my gut feeling on it. But there were actually a few other reasons why this stock caught my attention this last month especially. The first thing is that they made a sale in their position in Flipkart. So Flipkart was another e-commerce play that they had in India, and they actually sold their full stake in that company for $1.1 billion. So that's now $1.1 billion in cash that they have for acquisitions or even bettering their platform on eBay.com. Another thing I like about eBay is that they're kind of becoming a company that's self-contained. So right now they rely heavily on PayPal for their payments, or even Visa or other companies for payments. But they have announced that they will have their own payment processing platform in the future called Adyen. And this is still a few years away, but it is a step in the right direction to increase their profits and revenue substantially, in my opinion. Now, of course, this is not good news for competitors like PayPal or even Square, but as a potential investor in eBay, this is something that I want to see. I want to see more competition, and I want to see eBay actually go out there and grab more market share in different market segments that they're not currently in. They're also trading at an incredibly low forward PE of 14. So this is another reason why I think the stock is going to have a great year this year, because a lot of value investors will start picking up this stock as they notice it and as it comes more into the public eye. Right now, I think it's kind of flying under the radar. It's not really that known, especially with the analyst action. As you saw, there was nothing in May. But as we see upgrades come in, that's when value investors will take notice. And I think that's when we'll see the stock actually move substantially higher. But now if we take a look at the charts for eBay, we can see that the technicals show that we are actually near a major support level for the stock, where it's actually bounced off pretty nicely previously. It's created a couple of gaps on its way down from its all-time high, but nothing has negatively changed in the company fundamentally, which leaves me in a positive sentiment for this stock. What I really like is that it's currently sitting at around 20% lower from its highs. So this creates a lot of upside in the stock, especially if you start opening up a position right now. Now, if it does move a bit lower to maybe come down and test that support level, you could always add in to lower your cost basis there. Alright, so moving on now to my second pick for June 2018 is a company called JD. So JD is another e-commerce play, but this time it's a e-commerce play in China. So their biggest competitor by far is Alibaba, and JD is actually the number 2 e-commerce platform in China behind Alibaba. That being said, it does have a good user base, it is a well-run business, and it has been a company that I have played around with previously in my swing trade portfolio. Now, one thing that caught my attention was that there were a few rumors that have started going around that Tencent, which is another huge position of mine, has recently shown interest in possibly acquiring JD. And this will be pretty interesting because I think that if that does happen, they'd be paying a pretty good premium on the company at least $50 per share in my opinion. So that'll be a nice boost for any shareholders that are holding JD right now. And of course, it'll help Tencent shareholders because that'll just be another segment of business that they're going to be able to start pulling revenue and profits in from. That being said though, I would take this with a grain of salt because again, it's still a rumor out there. So in May, we actually had 3 analysts come out with their views on the stock. So the first analyst that we have here is Stifel. And on May 1st, they reiterated their buy rating, but they did lower their view from $55 to $50. Not really sure why they did that, but it's still a very bullish sign because it is still above where the share price is right now. Then on May 2nd, we actually had a downgrade from CLSA, but they still have a outperform rating on the stock with no price target set. And then on May 7th, we had a reiterated rating from the benchmark company with a buy, and they also lowered their price from $52 to $48. So still again higher than where the share price is right now, still a good amount of upside. And even though all 3 of these companies did technically lower their views on the company, it's still a good amount higher from where the stock price is today. So right now, JD trades at a ridiculously high PE of over 270, but they do have a forward PE of around 30. So this will be an interesting play over the next year because again, similar to eBay, I think a lot of value investors will start taking notice in this company. Usually when a PE ratio is this high at like 200 or 300, most value investors won't even take a second look at the stock. But as it starts coming down lower, as we start coming lower to 20, I think 20 seems to be a very great point for value investors to start seriously considering a stock. That's when we'll see a lot of money start flowing into this company from investors that never considered it before. So when I took a look at JD's latest earnings report, which was, I believe, in early May, the one thing that stood out to me was the number of active customers that they currently have, which sits at over 300 million, which is a 27% increase year over year. They've also gone ahead and increased their revenue 33% year over year. So as you can see, this company has its head on straight and it is growing immensely. It is pushing all its effort into growth right now, and it is showing in the numbers. So I think that in the next few years, JD will actually start becoming a very profitable company as they compete more closely with Alibaba. But now if we jump over to the charts and take a look at the technicals for JD, we can see here that it recently came down and filled a big gap that it created back in May 2017, so almost a year ago. And I see this as a very healthy move in the stock. With that being said, we did break down a major support level in April, and right now we're trying to find some good news to pop this thing higher back to above that support level. The shares on JD are currently sitting almost 30% lower from where its highs were. And I think this is a great level to again open up a position, and if we do go lower, to add to that position to lower your cost basis if you believe in the company. Now, full disclosure, I did actually open up a position in JD, but that's in my swing trade portfolio. So I will plan to hold the stock for at least a few months unless we move substantially higher in the next month or so. And I do have a target maybe around $50 or so per share. So let's see how we do with this position. But again, this is more of a riskier play because it is a company, first of all, that's based in China. Second of all, they aren't the dominant player in their space, Alibaba is. And third of all, we don't really know what their future is. Maybe they could be acquired by Tencent like we talked about. So there's a lot up in the air with this company, but I do see a lot of good upside, which is why I opened up a small position in my swing trade portfolio for this company. Alright, so getting into my third and final pick for June 2018 is another solid company that I do hold currently in my long-term portfolio, and that's Goldman Sachs. So Goldman Sachs, or as my wife likes to call it, Golden Snacks, is an investment banking company, and they're actually the best at what they do. So these guys make tons of money in volatile markets, and in fact, they actually came out recently and said that they made $200 million in a single day back in February when we had that market dip. So just stop for a second and just wrap your head around that. $200 million in one day. In one day. So that's just completely ridiculous in my opinion. Like, no company should be allowed to make that much money in one day. But anyways, I do hold Goldman Sachs. I do love this company. And I think as the market volatility continues, we'll see a lot more of these highly profitable days for this company. So if you are looking for a company to take advantage of this whole volatility swing and uptick in volatility we've been seeing recently, Goldman Sachs does benefit from it. So their numbers, as you saw from the last earnings report, was substantially higher than what was expected. And that was in big part due to increase in volatility. So again, with Goldman Sachs, there was actually zero analyst action back in May, which is actually very surprising because this is a company that's one of the largest companies in the world. So you would expect more coverage on this. But I think because they're a banking company and most of the companies that go out and put these analyst ratings are typically finance or banking companies, they don't like stepping on each other's toes, which is why I don't think there's a lot of action going on in this stock, at least from an analyst perspective. That being said though, if I do look at previous analyst estimates, a lot of them have a target at around $300 per share for this company, which is again substantially lower from where we're at right now. But now looking at the charts for the Golden Snacks, we can see that we've actually broken down below the 200-day moving average on this stock as well, but it seems to be finding some stability around the $235 range. I feel like we can dip even lower with this company though to maybe around $225 per share before we actually see some rebounding and moving higher, but that's just where my estimate is based on what the technicals say. So we're currently right now down around 13% from the highs on this stock, which is again very good value considering how profitable this company is and how they're benefiting from the recent volatility in the market. So all of this combined with a current PE of just under 11 and a forward PE in the 9s make this a very, very tempting play for both value investors and technical investors as well. So like I mentioned, Golden Snacks is also a company that I hold in my portfolio, my long-term portfolio. It's the only financial company in my portfolio, and it is the only financial company that I really believe in. They are expanding as well into the consumer space, which I think will be a booming business for them, especially in 2019, 2020 and moving forward. So there's a lot of good upside in this company, and it's why I wanted to include it in this month, because we are seeing it sell off a bit, and I think it's a great buying opportunity right now to get into the stock at a great value point. Whew, alright guys, thanks so much for sticking around to the end. I do want to let you know that I do have a new Facebook group, so I'll leave a link down below. It's called Positive Investing, and it's a group where I want to share my thoughts with you guys. I want you guys to share your thoughts with me, ask me any questions in there, ask any other members questions in there. I just want to build a nice, strong community in there where we can all benefit from each other and all grow together. So make sure to check that link down in the description below if you do want to join this group. It's completely free, no obligation, no payments, nothing like that. It's just there for discussion, just there to kind of help each other grow. But either way guys, thank you so much for watching. I really appreciate the support, and I encourage you to do your own due diligence on all of these companies, and don't forget to invest positively.